Welcome to the B.F. Anderson Technical Report for July 29th. Warren Buffett, good book written by Robert Hagstrom called The Buffett Portfolio, Mastering the Power of Focus Investment Strategy. So in the book, there's an interesting paragraph. Let me read it to you. It says, what's wrong with conventional diversification? For one thing, it greatly increases the chances that you will buy something you don't know enough about. Know-something investors applying the Buffett tenets would do better to focus their attention on just a few companies, 5 to 10. Buffett suggests others who adhere to the focus philosophy have suggested even smaller numbers. So anyway, I just talking a little bit about focus investing here. Mark Twain said it best. He said, "Behold, the fool saith, put not all thine eggs in one basket, which is but a matter of saying, scatter your money and your attention. But the wise man saith, put all your eggs in one basket and watch that basket." Very true. Now, Livermore, another great investor from the 20s, he said, "Throughout all my years of investing, I found that the big money was never made in the buying or the selling. The big money was made in the waiting." So if you are a focus investor and you realize that this is a more difficult process than, let's just say, being an index fund investor or a mutual fund investor, you have to find 5 to 10 companies that really make a lot of sense to you, not only from, a technical perspective, but from a fundamental perspective. And the story's got to be good. Now, usually the story we like to hear is that the company's got something new going on. So basically, focus investing is an interesting strategy. It's hard to do. But if you're a professional investor and you stay on top of this thing, this is where the big money is made. Now, let's just kind of take a look at where we are today. Nasdaq continues in an uptrend, one of the stronger indexes at this time. If we look at it on a weekly basis, you can see very solid uptrend, no problem whatsoever. However, the problem comes in where the market is just not broadening out. It's all concentrated in just the big cap names. Now, as we get into these graphs, I'm going to show you the small caps, and you'll see what I'm saying. But I think what my theory is on this and why this is happening is that investors, meaning mutual funds, exchange-traded funds, hedge funds, etc., they have something called liquidity risk, which means that they are so big that, like Buffett's gotten to be 400 billion. These funds have gotten so big that they can only find liquidity in the larger companies. So they're avoiding the smaller companies. But I think as the retail investor starts to carry more clout in the market, that could change. But we all know, or at least I know, that a substantial majority of the capital in the market is run by funds. So that's my thought. New York Stock Exchange, you can see the New York Stock Exchange is just moving sideways. We're just not seeing any kind of breakout there. Small caps, again, this is what I'm pointing out. The small caps are underperforming. I'm going to talk a little bit more about that in the video. S&P 500, very solid uptrend, no problem. We're above the 10-day moving average, making new highs. This is the weekly graph on the S&P. So like the Nasdaq, the S&P, the large cap stocks are dominating the market, I believe, because the funds are dominating the market, and they can only get involved in large cap situations. So that's just reality that we have to deal with. Now, on the aggression index, we're seeing somewhat of a pullback here. We're failing to make a new high in the ratio. However, this was quite a robust period. So what we're doing here is we're basically going through a consolidation, or you could even call it a trading zone, from this level to this level to this level. But it isn't an uptrend. It did hold the 40-week moving average, so we're not going to throw the towel in on this one. Now, on the 3 economic indicators, you can see interest rates continue to stay low. The 10-year note is at 1.25. Broke support here at the 200-day moving average. Could mean something. Maybe will, maybe won't. But at the same time, the price of oil took a big dip. Kind of getting a bounce here. Nothing to write home about. Financial stocks, along with interest rates, are basically moving sideways. New lows kind of picked up a little bit. This is somewhat troubling. The way this rule works is this is called the leaking boat syndrome. It's basically or leaking boat indicator, where if the market is making new highs, which S&P and Nasdaq are, and at the same time you're getting above 40 new lows a day, it's kind of a warning. So, just one more thing to be aware of. Now, on the inverted yield curve, no inversion, going the wrong way. You can see because interest rates are dropping. We'll just have to keep an eye on this. It's an important indicator. Now, on sentiment, we're seeing some improvement here. People are getting more fearful. The CNN poll actually moved back into fear from extreme fear, but fear. We got fear going here, which is good. We want that. Now, on the put-call ratio, which is more of a measurement of institutional fear, and I'm saying they're pretty much running the market, they're not as fearful. In fact, they're pretty greedy. We need to see some improvement there. A shakeout in the market will change that picture very quickly. Now, as you can see here with the growth stocks, this is that Russell 2000 growth ETF. This is just the growth stocks in the small cap Russell 2000. You can see just basically hit a high back on February the 10th, came down. So the growth stocks really are having a tough time here. That can change. It could change tomorrow. We just don't know. Now, one thing that has been concerning me a little bit, I look at a ratio of the junk bonds compared to the traditional treasury. We've seen somewhat of a rollover here, which could indicate that the economy is slowing down. People are less confident in junk bonds. Therefore, they're worried about default. Volatility index, very constructive, no problem at all, really staying in a very respectable area. Now, I did want to mention Bitcoin for a minute. I just can't seem to understand what's going on here with this. Now, I know that, technical analysis, you can only go so far with it, but and I'm not really a big patterns guy, but I do study patterns. There's really two patterns out there. One is a head and shoulders, inverted head and shoulders, regular head and shoulders. Then you also have one called a cup with a descending handle, which we may see one in our charts. We'll just have to see. I'll call it to your attention. But as you can see with Bitcoin, you got your left shoulder, your head, your right shoulder. You broke the right shoulder, came down, made a low, getting a bounce back up to the 200-day. I'm really concerned about this because I think there's going to be some people get hurt in this. And the technical work here is telling me look out for trouble, because I think what may end up happening is a digital currency come along and just kind of makes this stuff obsolete. We'll just see. Russell 2000 as a ratio to the Nasdaq. You can see here, small. This is what I wanted to talk about. I've got a monthly graph here, a 50-month moving average. Small caps have been underperforming large caps or the Nasdaq for a really long period of time. Now, don't fight the trend. The trend is your friend. So be really careful about the small cap group. It just looks like the wrong place to be at this time. We'll just have to see if it turns. Now, another area that's gotten very interesting is what's going on in China. Now, we've always kept an eye on the Invesco Golden Dragon ETF. Now, this is every Chinese stock that trades here in the United States. Looks like China is making some real big decisions regarding their private corporations, and as a result, you've got a peak here. Now, we would have actually gotten a sell signal in this particular ETF. We would have gotten it right in here around $80, and it's down to right now about $47, $48. So, we got the sell signal on the Chinese stocks. Boy, they've just continued in a downtrend. I would continue to avoid this group. Now, I want to mention on the top 5, this is not buy recommendations. However, we do own these stocks from time to time. They come in and out of the list. But what we're taking is a 8,000 stock database, and we're basically asking which of these 8,000 in our, using our formulas, are the strongest. And Cloudflare is definitely on the list. As you can see here, breaking out to a new high. We do own the stock. We've been in and out of it a little bit. We kind of got shook out here back when we got the scare about the Delta virus. But Cloudflare is basically a direct competitor of Amazon Web Services, which between Amazon and Microsoft, they pretty much have a duopoly on this business of server networks. So keep an eye on Cloudflare. It does look interesting. L Brands, retail, we're talking about, we're seeing names in the retail area that have a lot to do with outdoors clothing. So this would be LL Bean, outdoor stuff, boots, shoes, camping equipment. We're seeing things like Yeti, the ice chest company, things like that. Asana, which is a software company, you can see here the big sell-off yesterday, came on pretty heavy volume. I would wait for this stock to consolidate. No news on why this drop happened, but it is troubling. It actually closed below the 10-day moving average, but trying to rally back up to it. I think I would pass on this one for right now. Biochris Pharmaceuticals, Biotech. I don't own any Biotech. However, they are starting to show some potential life here. By the way, let me go back to Cloudflare. Okay, basically, you've got a strong uptrend here with a cup. This is not the particular graph I was thinking of, so let me go back and see if I can find it. Biochris. Now, we also have Biotech, which is another biotech. So the biotechs are kind of acting interesting. So that's it. If you have any questions, especially on cup with handle with descending handle, let me know. Thank you very much.